my name is Ron. I'm a friend and student of John's. Some of you might remember me from being on John's channel a few times before, and I've been doing pretty well trading BTC lately. Omi also. So John said I could come on the channel and go over. Last week I was 8 for 8 trading BTC, and we're going to do a playback about what I saw and how I came to those decisions. And at the end, we're going to talk about Omi a little bit as well. So the main time frame I like to trade off of is the 1 hour. So I go to the time frame above that to reference zones in the market that I want to sell or buy at. And this is how I had supply and demand zones drawn in the market. So when price gets down low, I'm looking to buy. And I know that sounds obvious, and everyone says they do that, but very few practice it. When it gets down here low, about to break levels, most people that I see on Twitter are talking about how they need to sell and you're stupid if you buy and and stuff like that. What I'm really looking for is signs that price is going to turn around in this level. Let's go down to the hourly and run the price action and see what happened and what I was seeing to enter those trades. Okay, right here I'm starting to see some signs that price is going to turn around. Now, keep in mind, we're already in this zone where I'm thinking to buy, but price could keep going down and break this level and go down. So I'm looking for signs that that's going to turn around. So you see, it came down, came to the bottom of this zone here, and had a pullback, and then it came down, and it didn't make a lower low or didn't even double bottom. So, and then you get a good a good bull reversal bar after that, and there wasn't direct follow through, but then a few bars later you get a bullish engulfing, and then you get some decent follow through after that, like the market's going up. And when I look at a price range like this, I almost try to visualize it like a bull and a bear arm wrestling, and who's getting the best of the arm wrestling match in there. So I'm already seeing, I'm in this zone where I want to buy. I'm starting to see signs of life from the bulls. So at this point, that's where I would put a trade window on and see what the risk reward would be. And if I go under that low and set a 2 to 1, because in this situation, I don't always set a 2 to 1. I mean, it is a bear market, and we're going long here, but I know the probability of this is actually fairly low because I'm trying to hit a main trend reversal. And if you're going to try to trade a lot of trend reversals, they're low probability. It's a good chance your stop loss is going to get hit. So you always at least want to have a 2 to 1 risk reward on those trades. And this is why it's so important on where this stuff happens on the chart and have an understanding of where these zones are, because I wouldn't take this trade under these conditions just normally if I saw this just in a random place on the chart. I mean, if anything, structurally it looks more like a bear flag. Now, we're under the daily pivot, but we came up and we tested it, and we're going back up towards it with some decent bull candles. We've tested the 20 EMA a few times, and wicked off of it, and we're under that. But once again, it's some decent bull candles approaching it. We're under 50 on the RSI, but it's going up. So there's a lot of factors there that could be starting to turn around and go in the right direction, but I wouldn't take this trade if I wasn't in this zone. So if I had all those factors going against me, generally I wouldn't take it. But because we're in the zone where I'm looking to buy, it actually could be a really good time to get in right at the start of a trend. So let's run the price action and see what happens. So I remember I got pretty lucky there to enter, and the way I set the order after that candle, I set it just above where the candle is, so that I'm going in the direction of the move. So I don't just enter on the close of the candle. I always set my order just a little bit above if I'm going in that direction, whether short or long, because I want to go with the trend. Really good, because now my premise was right, or it could definitely be right that we're bouncing up out of that zone. So instead of just adding to that same position, I actually set a separate trade of a long, and I do the same thing where I set the order just above that, and I put the stop loss down at the bottom of the breakout, and I set it as a 1 to 1 trade actually. And I do that pretty much every time I see a breakout from a range or a bottom demand zone area. Um, we want higher risk reward ratios, but it's also, you want to factor in the probability as well. And it looks really good to say, I'm a 4 to 1, 5 to 1, but the higher the risk reward like that, the lower the probability is that you're going to hit the trade. So I'd rather hit 1 to 1s than lose 4 to 1s. But also, just because I set the stop loss down here, that doesn't mean that, well, I'm just going to set it and forget about it. And if price just dumps right down and goes and hit the stop loss, well, whatever, it is what it was. No, if my premise is wrong, then I have a wider stop to manage the trade, and most likely I can at least scratch out at break even. Let's run the price action and see what happens. I adjusted this a little bit here, this window, to just bring the stop loss below that candle instead of that one. And that's the 1 to 1. So they have about the same take profit level, and normally that's pretty good. It means you're looking at the right levels. Good, but I don't want to get too relaxed because I think the market might still go up. This is a pretty strong gap right here, um, which can indicate that it didn't pull back very far, and it's a good sign of momentum up. I mean, when you get like candles like this coming out of a zone like this, it's called momentum ignition. So I'm really looking for, all right, was it going to pull back, or where it can find support at to keep going up from here. So let's run the price action and see what I ended up seeing. So I start to take notice here because, like I said, we have strong momentum up, and then this is the first time it touches the 20 EMA after that move up, and it just went under and then got a good decent bull candle for a bounce. So I went long there, and this is kind of like earlier when I caught that reversal down there. I know it could be a lower probability trade. I'm not using a swing low in the market for the stop. I'm going to use to the bottom of this candle, but it's a low risk trade too, because if I lose, I'm not losing that much, and because it's uh, a lower probability trade, I definitely want to do a 2 to 1. Let's run the price and see what happens. And it was similar to last time. And I remember when this happened, it was almost like down here, only on a smaller scale. So I did the same thing again and set a 1 to 1 trade to go in the direction of that candle just above the close of that candle, and the stop loss at the bottom of the candle, and just set it for like a 1 to 1. And also now I'm seeing other things. We're above the daily pivot, we're firmly above the 20 EMA, we're above 50 on the RSI. There's a lot of reasons to think that we're going to keep going up. So let's run the price and see what happens. And you can see those got hit pretty quick as well. But like I said, there was a lot of reasons to think that price was going to go up at that point. So you can see those got hit pretty well, and the reward wasn't as big on those as it was over here because the probability was higher at that point, and the market's going to go a little bit higher, and you can use a logical stop loss to hit a 1 to 1 or 2 to 1 trade. So the markets went up a bit now. If I think it's going to continue to go long, then I want to look for some kind of pullback again or somewhere else to get in the market. They got this level over here that the market had ranged in a long time to the left, so it might not break above that, but we'll just run the price and see what happens. So right here, I liked, oh, it got my attention again. We got a few things going on here. You could call this a falling wedge. It's not a textbook wedge, but you get 3 pushes down, and that's the main thing. It's a double bottom with this area over here. Um, you get some bull bars, but then you get you get some good bear bars, but then you get a decent bull bounce. So this is another one of those that it can be low probability, but I'm going with the local trend, and I know I'm going against the overall trend, and that's why I'm not setting any kind of 5 to 1 or 4 to 1 trades, even from this demand zone. But like I already mentioned, there was a big gap here in price, and then this time when the pullback, the gap closed, but you can see it was very small there, and now it's bouncing off that same level where it just bounced at over here. So I'm going to do the same thing that I've been doing and set an order just above that candle. So if price continues to go in that direction, and I'll set the stop loss here, and just go for another 2 to 1 up there around that same area, and that would mean it doesn't even have to. Here I'll go for that local top, a little bit less than 2 to 1 maybe. It's still a good trade, and let's see what happens. And you can see we hit that one again. So price just kind of ranging right now. We'll just run the price action and see what happens. So this is actually where I had entered back in the market. It was right before this candle right here. And here's some of the things I was seeing right here. So we're still above the daily pivot, and like we're right at the daily pivot, and the 20 EMA, the RSIs went down around 50 and turning down. We made these highs, then we're failing to make higher highs. And I also remember that this was over the weekend. That's why price was kind of flat like this, and it was coming into the daily close. And I believe I took reference on higher time frames and thought down was more likely than up also. And I had noticed how and it does this a lot on the weekends. It's almost like draws a line in the sand and forms a very tight trading range. So I made up my mind to do a logical short and to try to do it at the top of this range after I think I'd seen this candle. So I'd set an alert on my phone, and once price got somewhere around this candle, I set a short order, and I do the same thing, only the opposite, where I set it below the candle close. And I did use the recent swing high. I used this swing high over here, not one of these. And like I mentioned earlier in the video, if my premise is wrong, it doesn't mean that I need to let it run all the way to the stop loss. Then if my premise is wrong, then I'll try to get out at break even if I can. So, and I already ran it one candle too far, so you can see how to enter the trade right there. And I set it as a 2 to 1. It was close to 2 to 1. I set it just above this demand zone. I remember like 1.9 or something like that, just in case it bounced off that demand zone. And that's why it's good to have these levels drawn in the chart as time goes on, so you still remember where these levels are. So you see that one got hit as well. And as I mentioned earlier, I was taking some confluence on higher time frames, as well as the things that I mentioned on the 1 hour, on why I thought it was going to dump going into the weekly close. And lots of times you do see a big move on Sunday night, one way or the other. So after that, let's just run the price action and see what happens. Okay, and through some of that, I'll talk about why I did and didn't do some things. So, with the same logic that I used over here with getting in after those big green candles, why didn't I do a 1 to 1 on this big red candle? And I think this is something that a lot of traders, especially new traders, get confused with about big candles. And the reason is because that big candle is going right down into where I have as the 4 hour demand zone, which has that premise has played out to be true through this 1 hour uptrend. So that's why I didn't do that. And then here, where you got that big green candle, well, okay, well, it's going with the trend. Why didn't you do it that time? Well, you could have, and you could set that and it still might be successful, depending on what's going forward. But you have this level right here that price had ranged at for a while, so I wouldn't expect it to break through the first go up there, and thought a pullback was more likely. As a matter of fact, if we take from this breakout to here, a perfect 50% pullback, and 50% is a important number because at that point, bulls and bears that were in this trade, it's a tipping point where one side's gonna be in the negative P&L. So that's why, to me, the 50% level is the most important. But you had that 50% pullback. If the reason at this point I'm thinking that price is going to go up because you had the pullback after you came up and touched that level, but it didn't just range or go down here and double bottom or go back to this range. And don't forget, this is a strong demand zone down here. So the same thing that I've been doing over and over again in this video. I take an order to sell above that, and I'm not gonna do that. I'm gonna go for the swing low down here, and I'll do a 2 to 1 a trade here, and see. It may not make it that far, but I'll at least set it to that and see what happens, because that swing low is down there a little ways. But I still feel it's better to do that. And now you're getting that other zone in the picture. So it would stretch up towards that zone, and maybe I do a little bit less like that, like 1.9 or something. And we're above the daily pivot now. RSI is above 50, going up. We're coming back off the 20 EMA. So that was good. Obviously, the big green candle, that proves that the premise was right about going up. But what have I done time and time again is, when I see price doing what I want it to do, and you get a breakout candle like that, I set the order just above the candle and put it at the bottom or wherever the breakout was, and set a 1 to 1 order. And lots of times these orders are like close to where I was targeting from the previous trade. I mean, like they say, if it's not broke, don't fix it. I've done that several times on here. I do it on other assets as well. And then we're getting close to this supply zone up here. So let's just run the price and see what it does. So on the playback, you see that that wick just did miss that window. In real life, I did hit the trade. The window could have been slightly different. I obviously got lucky a few times here, but I had logical reasons for all these to go 8 for 8. And just because you have logical reasons doesn't mean you're always gonna hit all of them. So enjoy it when you do. So with Omi, after it broke 009, there's really not there wasn't really a logical place for it to fall. I looked back on a chart, the oldest chart I could find. It looked like there was a little bit of price action at 0004. So that could have been a level it could have slid all the way down to. But it looked to me like it was building this base here at 0007. So, and I'd seen kind of in Omi's price history that it'll have a downslide and then kind of build a base and then have a very tight trading range with low volume for a while and then just kind of burst out of it out of nowhere. Omi generally doesn't have slow, gradual moves inching out of a zone or a range. Normally it just bursts through it and then goes up for a leg or two. So the night the FTX crashed, I saw on OKX exchange, it went down to 0007. So that was one thing to look at. And then between 0004 and 0009, the level that it broke, and the level, looking back as far as I could that I could find potentially, this was like halfway in between those. So the fact that it had stopped here and then started building a base, it was a little bit of a chance, but I thought it was a good level to buy it at. It wasn't so much that I set a trade with a stop loss. I'm an investor on Omi as well. So worst case scenario, if it went down some, I would try to just sell on the way down and reaccumulate and manage it best I could. But fortunately, it went up, did what my premise was right again, and ended up looking smart. And while I'm up here on John's channel, I'll go ahead and tell you guys, I'm planning on starting a YouTube channel of my own, and we'll call it Ron's Cryptotherapy. I'm not trying to steal John's name. It's more like branching off from John, and some of his other students might come out with YouTube channels as well. There could be a Liam's Cryptotherapy or a Sal's Cryptotherapy or something like that. We'll all be kind of like the a big cryptotherapy family, I guess. So I'm gonna try to get that up within the next few months. There's some things I want to take care of first, but yeah, hopefully that'll work out. And before next bull market, we're talking about having some kind of group for Omi, and maybe posting our Omi trades and things like that. But thanks for everybody who tuned in to the end of the video, and Ron out.